This statistic really gave me a perspective that I will never forget ever again. As of March 2021, COVID cost a total $5.2 trillion. And the total cost of World War II, and today's number adjusted for inflation, was $4.7 trillion. The damage to the economy we recently experienced has been more expensive than one of the biggest wars on planet Earth, World War II. If that doesn't give you perspective on what we are going through as an economy, I don't know what else will. In this video today, I'm going to clearly show you the direction of Bitcoin in the future. I'm going to craft a Bitcoin price prediction that will trump all of the noise in the market and provide you with a clear path to making money. Now, I want to also put a tutorial, a simple cryptocurrency tutorial, start to finish, towards the end, on how you could profit off of the clarity that I'm going to provide you in this video. I'm going to give you the research. I'm going to explain it as if you've never known anything in finance before. I'm going to explain it super simple. And then towards the end of the video, I'm going to show you how you can make money off of it through something called margin or futures trading. With margin and futures trading, it's the only way that you can actually place a bet on the downside of the market. Yes, you can make money betting on the market going down. I want to show you the path to true financial independence in any market condition at any time, so you can actually fire your boss, leave your corporate 9-to-5, and make trading or just make crypto a full-time thing. I'm literally able to travel wherever I want. I have a remote business. It's amazing to have this freedom and the comfort to know that even through this economic turmoil, I'll be okay and I'll be able to provide for my family and others. It's a beautiful feeling. And before I start the video, I just want to give a special thanks to my community, the people that continuously watch my videos. I just want to say from the bottom of my heart that I love you. I appreciate you for spending your time, which is very valuable. I know how valuable your time is. You spend your time to watch my videos, and you're doing it like with me. There's so many other people out there that you could be watching cryptocurrency videos with. You know, you could be watching any of them. There's a whole bunch of influencers, right? But I just want to thank you. I want to thank you like dearly, like for real. I want to thank you for watching my videos and allowing me to show you the path towards financial independence, because it does help me pay my bills as well. So thank you for doing that. If you're new here, do me a favor, like the video, share it with a friend that can profit from this as well, and turn on post notifications. There's a little tutorial right there to show you how to do it on your phone so that you can have notifications at all hours of the day when I drop a YouTube video. It is random, it is time sensitive, because the market is random and time sensitive. So the videos come out as the market moves, basically. So turn on your notifications so you can get the videos first. Another thing, follow me on Instagram. I'm giving specific information. We're also doing a giveaway on Instagram relatively soon. Follow me there. There's information you won't find on YouTube. And follow me on Twitter. I'm calling the tops of coins. I'm giving out trades on Twitter. Follow me on all platforms if you can. And this helps support me, of course, for the future. Let's jump into the topic at hand here. So the first thing I want to talk about here is the 10-year Treasury constant maturity minus the 3-month Treasury constant maturity. Now, the reason why I'm specifically highlighting this is because we actually have an inverted yield curve. Now, I'm going to explain this, I promise. I know it sounds like rocket science, but it's actually very simple. Every time we get an inverted yield curve here, we go into a recession. So this gray, as you can see there, this gray vertical line are signaling the recessions, okay? Where people are struggling financially, where the economic environment is going down. That's what's considered a recession or a depression, but mostly recessions. So as you can see here, every time the yield curve inverts or gets below that line, we have recessions, and we are steep below that line right now. So the recession will come later. I mean, technically we already are in a recession, but it will get difficult a little bit later. And I'm going to explain to you why after showing you this. So if we look at the 10-year Treasury constant maturity minus 3-month Treasury constant maturity, pretty much the same thing just happened. As you can see here, we broke below it, right? And a lot of people have been asking for this, and you can see pretty much the same thing, okay? Once it breaks below, a little bit after, we have recession. Joke. It actually doesn't make sense, and it defies the laws of physics and all common sense, basically, that this is going on right now. So this is, again, a leading indicator to signal recessions. Again, I told you I was going to provide you with clarity on the market direction going down, and this is as clear as I could possibly get, but there is more information that I want to talk about. And I want to bring your attention to this meeting that's coming up November 1st to 2nd. And the reason why I'm highlighting this meeting with the Federal Reserve on the 1st and 2nd is because they are going to implement more hawkish federal policy. Hawkish federal policy is basically decreasing spending or slowing down the money printer. Let me be clear with everybody watching this video. If you're brand new, you've never heard anything about money, okay? I want to be clear. The Federal Reserve owns the right to print or not print money. So essentially, it starts the printing of the United States dollar or it slows it down, right? It's that simple. Now, the beauty of this is that you can see when the market is stimulated. So typically, a lot of assets do well, and we see these big rallies. We see the assets going up a lot in value when the printing was turned on. And it makes sense because it's a big stimulus. They're stimulating the economy. They're injecting liquidity or cash. They're injecting cash into the economy, which makes asset prices go up. But there's also the flip side. When they stop injecting liquidity into the market or cash into the market, we see the opposite effect. We see the market start to go down. Now, again, you can make money on both directions. You can make money by buying assets while they go up, and you can make money by shorting assets while they go down. Now, the importance of this meeting on November 1st and 2nd is that we are going to most likely have more hawkish federal policy, which hawkish means they're going to slow down the money printing and the market's going to go down. That's what's happening on the 1st and 2nd. It's a pretty much guarantee that it's hawkish, but they're going to explain how hawkish they're going to be. So they could be aggressively hawkish and like really stop the printing like immediately. Then the markets will tank and really go down hard, or they could do it and ease into it. So we're going to figure out officially what they want to do on the 1st and 2nd. But there's one thing for sure, it is hawkish. And if there's anyone telling you otherwise, they do not know what they're talking about. Please listen to somebody that has your best interest at heart. It's very important. There's a lot of bias in the financial markets. There's a lot of incentives that pay people to do things they shouldn't be doing. I don't worship money. The love of money is evil. Money is not evil, but the love of money is evil, okay? I don't do this. And if you've been with me for a while, you know that. So if we look at something called the CPI, which is the Consumer Price Index, this measures the monthly change in prices paid by U.S. customer. The Bureau of Labor and Statistics calculates the CPI as a weighted average of prices for a basket of goods and services representative of the aggregate U.S. consumer spending. So essentially, it's a good way to look at inflation. They use inflation as a measure of when they should be going hawkish or dovish. If they print way too much money, inflation gets out of control and they have to lower the amount that they print. So people get mad when inflation's high. Right now, inflation's high. The CPI is a measurement of that. The CPI is one of the most popular measures of inflation and deflation. It's like having a cup of tea, right? A very sweet tea. It tastes good. When you pour more water into it, it starts tasting diluted. It's the same thing with your money. Inflation is a measure of the dilution of the tea. I'm sure you've heard your grandma say they used to buy a can of Coke for 10 cents. This is what happens with inflation. It devalues your money. The reason why I'm bringing this up, I know a lot of people, a lot of my followers always know this, but I want to point out something specific in the CPI because there's a lot of people that think that inflation is going to turn around, it's going to go down, and when it goes down, they're going to flip dovish and they're going to start the printing again. They're going to start printing again because inflation is stopping. I want to show you why that's probably not correct. One of the most important sectors of the CPI is housing. As you can see, this weighted basket calculates the CPI as weighted average of prices for a basket of goods and services. So there's different types of things that they're calculating to give you the CPI. Housing is the biggest category. As you can see here, 32.5%. It holds a massive majority over the rest. The next one's commodities. It's only 21%. I want to bring up the CPI for shelter. So as you can see here, CPI for shelter, which is, again, housing. You could see it's on a massive increase and it shows no signs of reversing. It's showing no signs of reversing. And a recent CPI report, they actually highlighted it. It's at 6.6%. And Jerome Powell even said it himself that he does not see signs of this reversing in any way, shape, or form. So we've been talking about housing. The CPI shelter is that category. And it actually can skew inflation numbers because of the way it's calculated. Like we said, shelter takes about a third of the CPI basket. So it's a big driver for the CPI overall inflation. Here's what Jerome Powell has to say about shelter.
I think that shelter inflation is going to remain high for some time. You know, we're looking for it to come down, but it's not exactly clear when that will happen.
It's a majority category, and it's also one of the hardest to measure. And it's actually a huge problem for the Federal Reserve because they're trying to push inflation down and it can't calculate the CPI shelter correctly. It's literally the trickiest category to measure in the CPI, and it holds the biggest weight in the CPI. When the CPI measures for shelter, it's measuring the service that a housing unit provides to its occupants, or simply put, the cost or value of your home. So if you think about the money you spend on a monthly basis, the majority of what you're spending is probably on housing. So it's going to be a big part of the CPI. There's actually 4 different categories in the shelter index, but the most important are rent of primary residence and the owner's equivalent rent of residences. Let's look at the rent of primary residence first. It basically tracks prices that people pay for rent. The problem with this is that it's called sticky prices. It means that it changes relatively infrequently because it's rent. The prices are literally locked in place because of a lease term. If you've ever signed a lease, it's usually for a 6 to 12 month period. It's locked in place. The BLS has to gather data differently than it does for other categories. Data for things like food or transportation are gathered every month or two, and that's easy. But it's only gathered for rent every 6 months because of the lease terms. Sample areas called panels report on a scattered schedule. So one might report in January and July, and others will report in February and August. That means that changes in rent might not trickle into the BLS's data for months down the line. What the BLS is trying to do and why it's so hard is that they're trying to calculate the people that are trying to get new leases and the people that are already in leases at the same time. So trying to get that picture of the overall market is very difficult. According to the Dallas Federal Reserve, changes in the rental market can exceed changes in the shelter index by an entire year. They literally have to wait for new people to sign new leases for those actual price increases to show up. But this is not the tricky part. There's actually a bigger slice, a 74% majority, which is the owner's equivalent rent of residences. This is crazy. This is the price an owner would pay to rent a comparable home. The BLS does not factor house prices into the CPI. This is crazy. They consider home ownership an investment and not a consumable good or service. The BLS assigns owned homes an equivalent rent based off the rental price in the area. And it's a rough estimate. It's not perfect. So if you look at home prices versus shelter, rental prices can cause a lag, and it can be very imprecise. And sometimes the shelter index looks very different from what's happening in the actual housing market. And this makes a massive difference in the most important metric of today's society, which is inflation numbers. It's a vast majority of the CPI, and it's not calculated perfectly. The Federal Reserve will not flip dovish until the shelter index starts to decline. The shelter index lag makes things extremely complicated for the Federal Reserve. Remember, they're looking to affect inflation month to month, and we have these random periods where the shelter index will update every 6 months or so. Let me highlight something that I thought was insane. Owned pricing units themselves are not priced into the CPI housing survey. This blows my mind because if it was priced in to the CPI report, it would be devastating for inflation. And it doesn't make sense. I think it's ridiculous. People buy their homes to live in it. I would say the majority of people that buy homes, they buy their homes to live in it, not as an investment. They just want to pay less rent. They want to pay against their actual loan. It just doesn't make sense that they calculate it that way. Why would they not include owned housing units? It doesn't make sense. And if you did include it, look at the median sale price of houses sold in the United States. Look at the price. We're on an incline. It's ridiculous. The cost of houses are going exponentially high. So imagine if they calculate that into the biggest category, 32.5% of the housing CPI. The CPI is misleading. Inflation is much higher than we know. You guys know this. You're probably feeling it right now. Median sales prices of houses sold in the United States. Look how ridiculous that is. That's insane. Also, another statistic on the housing market. Monthly supply of new houses in the United States is on a decline. So what we're looking at here, the month supply is the ratio of new houses for sale to new houses sold. So this is how many houses are for sale versus how many are sold. And you can see the ratio is on a massive decline. Also, you could look throughout history. Every single time we had a massive decline, we had a recession. Look, down, recession, recession, recession. Again, the vertical gray spots here are recession, recession, recession. So if I scroll in, it looks like we're coming down. The ratio is coming down. So that means that there's so many new houses on the market, but the demand is decreasing. Nobody wants to get into the new houses. We're at an all-time high for pricing in houses. Nobody wants to buy new houses. And the CPI does not calculate the price of homes. So basically, there's this hidden metric that I just showed you. I just showed you a secret hidden metric that nobody's paying attention to that proves that inflation is higher than what the headline numbers are. And if all that's the case, if inflation continues to go up in the housing sector, which they highlighted in the recent report that the shelter, the CPI shelter, is on an exponential increase, but there's parts of the housing market that are not priced into this exponential increase, so it's even bigger than we think in the biggest category of the CPI index. Inflation is higher than 8.2%. And if inflation is higher than 8.2%, there is no way in their right mind will they will start to print more. If they start to print more money, they are going to increase inflation even higher, and the value of your dollar will decline more, meaning your salary of $50,000 will be significantly less. If inflation, which I think it is, if it's double digit and 20% in the United States, and you make $50,000, take $10K off. You really make $40,000. And then take taxes off, and then take all of your home expenses off. So really, you're making $40,000. You guys don't even know it. So of course, they don't want inflation to increase because there's going to be massive panic. There's going to be huge panic in the market if they allow inflation to increase. But right now, it's like almost uncontrollable. Housing prices are going crazy, which are not calculated. Bro, you guys get the point. The market direction is down. There is no way that they are going to start the money printer. There's no way. The Federal Reserve, it's going to continue hawkish, which is a clear sign that all assets will decrease in price, meaning the direction of Bitcoin, the direction of stocks is down. It's going down for the next 6 months to a year until this reverses. It's going to continue to go down, but there's good news. You can make money by predicting the direction of the market, which I'm literally giving you the answer right now. Now I'm going to blow your mind a little bit more. Take a seat. Remember at the beginning, I gave you this massive statistic. As of March 2021, COVID cost 5.2 trillion. World War II cost 4.7 trillion. You remember that? Well, this is where I'm going to bring it all home for you. There was an act that came out. It was called the CARES Act. This is where the $2.2 trillion was printed. The vast majority of it. It was a bill that was passed to stimulate the economy after the pandemic hit. Because when the pandemic hit, all the stock market, everything tanked. Tanked meaning go down. That's what tanked means. It means goes down. Okay? The entire market dropped uncontrollably. It was massive panic. They shut down the stock market in 2020 in the COVID event. If you weren't there to experience it, I experienced it. Bitcoin dropped like 70% in one day, or like 2 days. It was crazy when the pandemic hit. So they put in the CARES Act to inject money into the market to reverse the direction, almost like an emergency panic. They were like, yo, well, we got to print money now. Oh, snap. The market's dropping. We're printing money now, right? The US Congress passed a $2.2 trillion stimulus bill called the Coronavirus Aid Relief Economic Securities Act in March 2020 to blunt the economic damage set in motion by the global coronavirus pandemic. We got to inject liquidity into the market or everything's going to go to zero event. But they printed the most amount of money we've ever seen in any bill in the history of America. I'm talking about since America was made. We've never seen this much money printed. So what do you think that does? We just explained it. It causes inflation to increase. And there's been catastrophic consequences since then for the past 2 to 3 years. Since they did it, there's been catastrophic consequences in inflation, in the market, et cetera, et cetera. All right? Now, I want to point out a specific part, which is the majority of what they printed. Recipients of the $2.3 trillion in funding went to large businesses and small businesses. The majority of it. Look, you can literally see it right there. 49% went to businesses, which is crazy because households were feeling it. You remember when you got that stimulus check? This is where it came from. But businesses got a bigger stimulus check, unfortunately. Now, what I want to point out here is they gave them loans. And then there's this sketchy thing that a lot of businesses do. I don't believe in it. I don't know. I'm not trying to go into morals right now, but they do it. And it has massive consequences for the stock market. And it actually is a very great indicator to show a lot of market conditions in the stock market, which if you didn't know, the stock market and S&P 500 is considered risk on. It's a risk on environment, meaning it's a riskier investment. And so is crypto. So if you look at the S&P 500, which I've shown in previous videos, subscribe to the channel, go watch the other videos. It'll give you context in this situation. But the S&P 500, which is an index of all the stocks, which is basically, imagine a pot and all the stocks are in there and there's one price for all of them. That's the S&P 500. S&P 500 is basically very correlated to Bitcoin's price. So when the S&P 500 drops, so does Bitcoin. So what I'm trying to explain here is that all of these businesses in the S&P 500, they got a massive stimulus and they used it for something that's sketchy called corporate buybacks. What does that mean? That means they literally took out a loan and they're like, oh, free money. And then they bought their own stock. They bought their own stock and the price of their stock went up. And then there are a whole bunch of guys that are like, oh, look, the market's good. Everybody's happy because the market's good. But really, it's the people that own the stock, that own the company, that bought their own stock. And they got the money from the government. You hear what I'm saying here? Inflation got increased because why? Because of this bill. We talk about the CARES Act, right? So what happened was we had this big pandemic. All markets started tanking. And then they were like, oh, Federal Reserve, oh, we got to print money. We got to print money. They print a whole bunch of money. They gave the majority of it to businesses. And then the businesses just basically bought their own stock. And then the prices went up because they bought their own stock. That's how it gets stimulated. Now, I'm about to blow your mind right now. Watch. If you thought it was good, watch how good it's going to get. This literally signaled the top of the S&P 500. As you can see here, by the way, we have another record here. We've been getting all types of records. We have the most money ever printed, and now we have the most buybacks ever in the stock market history, which was Q1 of 2022. The exact top of the S&P 500. Look, Q1 2022, look at this purple bar. S&P 500 buybacks in billions of dollars annualized. In Q1 of 2022, let's go over here to S&P 500, right here. Look, January 2022, right here was the record high for corporate buybacks, which signaled the exact top of the S&P 500. Look at the market going down. The market's going down, right? This signaled the exact top of the S&P 500. Let me say it again for the people in the back. This weird thing that they do with stocks, where the government gives them money to buy their own stock, to increase their own stock price. The biggest we've ever seen was in Q1 of 2022, which signaled the exact top of the S&P 500 and the exact top of Bitcoin. Whoa! Does that not blow your mind right now? What it also shows, as you can see here, it is a leading indicator. Leading indicator means it shows before the market drops. So if you watch it, you can literally predict when the market's going to drop. Now, I'm going to show you another chart. And if you combine the last one with this one, it's going to blow your mind even more. So this chart right here shows total gross issuance of stock minus S&P 500 buybacks. So they're showing stocks and then they're subtracting, okay, they're taking away the buybacks. They're like, okay, how does the stock market look without the buybacks? It's at all-time lows. So basically no one bought their stock. The only people that bought their stock were the actual companies themselves in the beginning of the market. So they're underwater, they're burned right now. Imagine a company like Facebook, in the beginning of the year, they're like, all right, we're gonna buy the most Facebook stock we possibly can right now. At the exact top, they wrecked themselves, and now they gotta pay that loan back because they're down and they're underwater. The S&P 500 has tanked. Every single company is down. Look. We're down. This is no joke. So now all of them are underwater. All the companies, all the people that were like, oh, I'm buying my own stock. They're all underwater and they got to pay those loans back. This is what you call a debt cycle. And it's no joke. It's no joke. And it's going to bring the market further down until inflation reverses. If we do not see inflation reverse, stock market will continue to tank, meaning go down. The Bitcoins will continue to tank. And I'm not done here. I got crazy evidence. I got more evidence. I'm not done here. Like the video, share with somebody that needs to watch this. I got significant evidence. I want you guys to take a second, take some notes, please. This is like a 1 in 10 year video. I don't think I've made a video like this that has been this significant in a while to give you guys the clarity to make some money in this market. All right? I don't think I've done that. I don't think I've done it to this extent, and I want to help you. This is going to be a simple KuCoin tutorial to show you guys actually how to get your money onto the exchange and initiate your first trade. I suggest you pop open your screen and follow along because it's going to be very informational. I had to turn my background red. I had to turn it red because this information is about to get dense. As we get further and further, let me put the microphone closer, make sure you guys hear me. As we get further and further in the video, it's going to get even more serious. I highly suggest, if you haven't already, please pull open the notes application on your phone. Write down some of the information I'm about to tell you, or simply rewatch the video. Rewatch the video. Also, if you care for the people around you, your friends that are in the stock market, in cryptocurrency, or doing any type of financial investing, please, for them, not for me, share this video to those people right now as we speak, because it's going to get serious. And I'm going to provide you with significant evidence to the downturn of the market. This affects every financial asset class. I know I titled the video Bitcoin price prediction, but this is every financial asset class. They need to pay attention to the information that I'm providing here today. And I'm not being dramatic. Watch what I'm saying. If we come over here to Bitcoin's price, you can see I have a whole bunch of notes. And I'm going to try to go through this as simple as possible because there is a lot. And as you can see here, I also provide a specific short. I'm literally telling you exactly where to place your trade. Now, as you can see, there's a green line. I want you to pay attention to that green line. It's significant. Why? Because it signals the all-time high for Bitcoin's price. As you can see here, all-time high. If we come over there, I want to show you what happened for Bitcoin's price last cycle. As you can see here, futures contracts launched for Bitcoin on December 10th through December 17th. So essentially, there was this big kind of exit liquidity event for Bitcoin. Basically, they launched futures contracts. There was this big regulation that was passed for cryptocurrency, for Bitcoin specifically. And then it signaled the top. So these big events with the United States is important to pay attention to because they basically move the entire market. I've made the claim that macroeconomics move the market. Well, guess who moves macroeconomics? The United States. It's the president and the Federal Reserve that basically make most of the decisions on where these assets go. And I'm going to prove that to you right here. And I'm also going to tell you what decision they're making next. First things first, I want to show you this specific event here. This signaled the exact top here. And I'm making a claim. Maybe this is wrong. I think this is the bottom of Bitcoin's price. $13,000, $13,800. I think that's the exact bottom, personally. And the reason I say that is because that signaled the local top. And I'm going to make this claim, and it's very interesting, but there's a new token that just came out called Aptos. So if you know anything about Facebook, they actually ditched the project. So Facebook ditched the project because there's just way too much regulation. They didn't want Facebook to have their own cryptocurrency for obvious reasons. They'll have too much power. They'll have the biggest social media and they'll have a crypto. It's just too much power. So they actually stopped Facebook from making the coin. But the technology behind Facebook's Libra, they actually took the same technology and they launched a new coin called Aptos literally in the past couple of weeks. So this is kind of signaling, like, again, another major sell the news event. In my personal opinion, as a whole crypto, there's a lot of big players backing Aptos, including FTX Exchange and some huge investors. The biggest investors in crypto are backing that coin. They're looking for exit liquidity through this entire project. That's exactly what they're looking for. What you guys have to understand is that these big companies, they move the market with their decisions. And I'm going to prove that to you a little bit more. And this is also a reason why I think that this is probably the bottom for Bitcoin, $13,000. As you can see here, the United States files a civil action to forfeit cryptocurrency valued at over $1 billion. So essentially they took $1 billion worth of cryptocurrency from Silk Road. There was a big lawsuit over this drug website and they had all this Bitcoin. The United States essentially bought the dip or took the dip right here, which is the exact $13,000 price level. So I don't think the United States is going to let Bitcoin go below that. This is just my opinion. So again, I think the exact bottom is around $13,000. I know there's some people calling for 11K. There's some people calling for 13K. I think it's 13,800, 14,000, the higher end of $13,000. Okay, here's another thing. MicroStrategy actually started buying Bitcoin between November 29th to December 8th, which is literally right here. So I think they're going to shake MicroStrategy out and bring it back down to this level here, you know, so that he can buy his tokens. I think this is going to be the big event. MicroStrategy is going to get hit somehow, or maybe they don't get hit and they keep buying and leveraging up. Regardless of it, you could tell that the whole entire bull market started with these two things. The United States, okay, right here. And we have MicroStrategy buying Bitcoin. The first time they bought Bitcoin, they bought a whole bunch of Bitcoin. They bought 1,434 right there. Of course, he's going to try to not sell, or he might get liquidated. Who knows? But I do think that this event and these two other events are significant around this area, in which I'm about to make a prediction of where I think Bitcoin is going to go. So pay attention to what I'm talking about here. These are huge companies: MicroStrategy, Facebook, and the United States government. That's what we're talking about here. This is significant. Stop with the noise. There's so much noise out there. People are trying to show you altcoins and all these things. Stop with the noise. Let go of all the noise, because this is significant. We know Bitcoin moves the price of altcoins. So if they're talking about altcoin, they're wasting your time. I know this for a fact. Now, a couple of other events we can see right here. Tesla bought, okay? Right here, Tesla bought. This is the first time they announced that they're going to accept Bitcoin as a payment. And they bought a whole bunch of Bitcoin, 1.5 billion. Right here, it shot the price up. And it also signaled the top. And I also want to point this out because we're going to be going into oil prices, because this is probably one of the most significant events coming up. Oil and inflation, it's going to be crazy. I want to show you what I'm talking about here because it's real. Top of oil's price was right there. So that signaled the top of Bitcoin, right? I'm just going to go through these events and I'm going to put it together for you, okay? As you can see here, energy signaled the last top of Bitcoin. Energy and BitConnect. So again, another event where the United States is seizing assets from a scam. That signaled, okay, right here, the last top, America, again. And also, which is more significant, I think, today, the president is announcing that the Department of Energy will make available the release of 50 million barrels of oil from the Strategic Petroleum Reserve to lower prices, okay, keyword, to lower prices for Americans and address the mismatch between demand exiting the pandemic and supply. Very important. That signaled the exact top of Bitcoin, and ever since then, we've been declining a significant percentage. Look how crazy that is. 70% down from that. This is the exact top. Go look up anything I'm talking about. You can back test it for yourself and research it. Just Google search the dates. You see all the dates in the video. Come to the video, double check, triple check. I want to make sure I'm correct. I know I'm correct. I looked at this for hours. I've been spending 2 days on this video. I know for a fact the dates are aligned, but if you want to look at it for yourself because there's some honesty issues or whatever the case is, you could do that. I highly encourage everyone to do their own research, obviously, but this is real. This signaled the exact top. I know it's blowing some of your minds. Now, This is where it all starts to come together. As you can see here, Tesla dumped. Now, I want to be clear. Tesla sold 75% of their Bitcoin at a loss. So that signals something right here. Tesla has dumped 75% of its Bitcoin after a year-long trouting long-term potential. They're saying long-term potential, but they sold 75%. So they took a massive loss and they took a public loss. Everybody's watching them. So they took a massive public loss, right? This is important. Why? Because they think the market's going to go further down. There's no reason to take a loss other than the fact that you think it's going to get worse. So this is real. And I don't see price coming above this level because, again, this is Tesla dumping their Bitcoin on the market. We're going to need a new company to come in and scoop up all of that Bitcoin. So, again, I don't think, like, look, right here, this is when Tesla dumps their crypto. It's not going above that price level, which is why we put specific short here. I'm going to talk about it. Actually, I have this chart here. I'm going to bring it up bigger in the future. This is the exact point. This came from somebody, that's not even me. This came from Nick, our coach in Fundamental Secrets, professional technical analysis expert. So he gives you the exact entry. And I'm going to talk about it in the future. And I'm also going to show you how to send your funds to an exchange to do the trade. I'm literally going to give you everything. I'm literally laying it all out for you in front of your face. If you can't make money, it's because you are not disciplined and you can't sit there and make something happen. Watch this video 100 times if you have to, but I'm literally giving you everything. There's literally nothing else, okay? Now, I want to show you oil because this is the oil price. As you can see here, we're looking at oil's price. So the price of oil, and countries, they got to buy oil for reserve so that they can supply oil to their people, right? So right here, today, the president is announcing the Department of Energy. Remember I told you it signaled the exact top for Bitcoin? Well, Biden tried to lower the price of oil. He's like, I'm lowering the price of oil by, making available 50 million barrels. I'm getting 50 million barrels and I'm lowering the price of oil. It did. It lowered it. Boom. But not for long. Not for long term. As you can see, this signaled the exact top of Bitcoin. But oil continued to rise in price. Even right here, look at this candlestick. This was around the war. Obviously, there's issues with Russian oil, right? So look at this candlestick. We even topped out over here. Look at this, March 2022. We topped out. Look at, again, I want to make it clear. I want everybody to understand. Biden tried to lower oil right here. Right here. Biden tried to lower oil in November of 2021. Well, guess what? Remember I told you the Federal Reserve meeting is coming up on the 1st to 2nd, right at the same level. For people who are like, oh, he's not going to try to lower the price of oil. Of course he is. This is the same level he tried before. He's going to do something, and I'm predicting it. And you know why? This is where it hits home. The U.S. has just 25 days of diesel supply, the lowest since 2008. Here's why that's more alarming than a dwindling oil piggy bank. This article is literally stating that this is worse than finances and the economy. It is, because we're not going to be able to turn on our AC. We're not going to be able to get oil for cars. What about the food in our stores? Who uses diesel oil? I don't know. Diesel cars, like big vehicles that transport food? Think. Let me bring it back home for you for the people in the back that didn't hear. This signaled the exact top of Bitcoin. Today, the president is announcing the Department of Energy will make available 50 million barrels of oil. And if we go to oil's price, you see it dropped a little bit, but it didn't really stop it because there's a lack of oil. So the oil price increased. Basically, Biden's plan sucked. It wasn't good. It didn't work. And it's not to Biden. He's dealing with, obviously, these huge problems that not one human can solve. I'm going to be real with you. But oil prices increased, right? So at that same level, right here, same level, I could even draw it for you, bro. People are not hearing me. The same level. Y'all, do me a favor, like the video, subscribe to the channel. Like, this is some mind-blowing stuff. I'm blowing my own mind while I'm making this video. Straight up. The same level Around the same month, we're talking about October, November. November 1st is the Federal Reserve meeting where they're going to announce that they're doing more rate hikes to lower inflation. We talked about this before. We talked about the housing market, how the rising prices are not calculated in the CPI, and how the CPI is basically out of control. They can't stop it. So they're going to do another rate hike. And at the same time, President Biden is going to come out with some type of lower oil thing. He's going to try to lower oil again around November, which, by the way, perfectly lines up with our trade. Perfectly. Nick didn't even know about the information I'm giving you right now, just to give you guys I'm giving you a clear explanation. Nick made this chart based off technical analysis. He did not know about this video. And it just so happens to be that his price targets are identical to what I'm talking about here. This blows my mind. This is a 1 in 5 year trade. I'm going to make a significant amount of money on this, and I'm trying to tell people, as many people as I possibly can. Here's the original article. President Biden announces the release from Strategic Petroleum Reserve as a part of ongoing efforts to lower prices. Look at the date, November 23rd, 2021. Let's pull open Bitcoin's price on November. Look, November 23rd is like right here. It wasn't the exact top, but it was close to the top. Boom. Oil prices, let's go bring it back up. Oil prices dump, but then rise again. And as you can see, they didn't really get cheaper. Recently, there's been some cheap, it dropped in price, but look at this green candlestick. Massive green candlestick here. And then Biden's like probably freaking out. He's like, man, I got to lower inflation, right? Federal Reserve got to lower inflation and I got to bring down the price of oil. I'm going to try again to throw something out. It's going to happen, bro. There's only 25 days of diesel supply left. We can't get food to our grocery stores. Catch that. Catch that. Oh, catch that. So if you combine pretty much everything that's going on, I mean, we got rising inflation. We got the CPI shelter, okay, which doesn't calculate the rising price of homes. There's an increase of home stock, but not enough demand to buy the houses. And that's not taken in consideration in the CPI shelter, which is, by the way, at 6.6%, which holds a majority of the CPI, 32.5% of the CPI. So the housing part of the CPI is not showing any signs of reversal, which is the biggest part of the CPI. They can't stop inflation. They're doing rate hikes on November 1st and 2nd. We know this. They have to. They have to do rate hikes. They have to lower spending on November 1st and 2nd. It's just how much they're going to lower spending is the gist. But at the same time, Biden is going to have to do something to lower the price of oil at the exact liquidity level that he did it in 2021. Whoa, this is crazy. This is crazy. The direction is down, and now I'm going to show you the light. I'm going to show you how you could profit off of this event so you can pay your bills, so you can get groceries, so you can take care of your family. I'm going to show you a low leverage short. Not crazy. I'm not going full degen, Alex, invest all my money into one asset and try to 100x in 2 days. That's not what we're doing here. I'm showing you a safe, low leverage play. Now, let me pull open Bitcoin's chart here. Again, guys, do me a favor, like the video. This is actually crazy. I feel it right now. Oh, by the way, before we keep going, one more thing I want to point out, man. The last time we had, look, this is a full-on bear market in 2017. I'm not going to miss this one. Look, October, November, bro. Like, whoa, like what else do you guys need? November, right here, November 15th. November 15th is when we had the last fall for Bitcoin's price and last bear market. What do you think is going to happen? Bro, like, the stars are aligning for you to watch this video. You need to share this with somebody. The stars are aligning. I'm calling the bottom. I'm showing you multiple points of evidence from different financial markets. I'm back testing it with historical price points. And now I'm going to show you exactly where you should short the market. And this is from Nick. This is the fair value gap here. Let me pull open a better chart. All right. So as you can see here, he expects price to come up to $21,000 BTC. So this is called the fair value cap. This is basically an insecurity in price. So you can see this long candlestick here is an insecurity, and they're going to run it back up. So here's one more thing I did want to point out. As you can see here, we have a long trend line and we just broke out as I'm making this video. So what they're doing is similar to what they did here. So they're running it up, trying to find exit liquidity. They're invalidating the super long trend line. There's a super long trend line. They're going to invalidate it right here. They already invalidated it. They're going to run it up to this liquidity level here. And then look, this is November 1st, 2nd. Right here, they're going to run it up. And anything above this is a short to me. Anything above this, anything above $20,500 is a short. So it's literally coming here. I'm going to like rush upload this, right? Anything above here, you drop a low leverage short. They invalidated it. Then all the influencers like, I told you I was right. I told you right. And then they start making these 100x videos. That's exactly what's happening. They're getting all the early people. Me too. I lost money on a recent trade. I jumped in a little bit too early. This is so perfect that I'm so glad I lost money. So I can give you this perspective. I jumped in a little bit too early on my short because I'm I think the market's going to go down here, right? So I jumped in a little bit too early. They liquidated me. They stomped me out of my position, which is what they're doing to everybody. They're liquidating all the shorts, the shorts that are too early. They're liquidating all of them. And then all the influencers right here, all the influencers are going to be like, yo, 100x altcoin. Cardano's going to $1 million. 2023, it's going to be super bullish. And all of them are going to be like, oh, I was right, because they said that I was going to be bullish right here. And they're all like, oh, I was right. And then boom, that sets it perfect for all of the unsuspecting victims for exit liquidity. So they were right, short term, right. And boom, exit liquidity, which is what I want to talk about today, which is how to short the market. Now, I'm not going to short Bitcoin. Maybe I might short Bitcoin, but the best shorts, you can see I got in even too early to BNB. The best shorts, okay, are going to be, and look, I'm going to easily add to this position. As you can see, even though it's negative, and the reason why I don't care is because it's a low leverage short. It's a 2-3x leverage. So that means that it's going to be very, very hard to liquidate me. And I'm going to explain that. I could even show you how to do a 1x leverage. So let me be clear. I'm going to show you how to do a 1x leverage. So the price of the asset literally has to go up 100% for you to get liquidated. So if you go here, that's like impossible. It's not going to happen. In this bear market, there's no way any of these assets are going up 100%. But if it did, that means your liquidation price will be up here. 500. That's like almost at all-time high. That's at all-time high for BNB. There's no way you're getting liquidated if you do a 1x leverage, which you can do on KuCoin. But first, let's do a simple tutorial for you guys to get to the next level. The first thing I'm going to do is I'm going to show the pros and cons of a centralized exchange in crypto. Yes, they are not perfect. There's no human that's perfect. There's no centralized exchange that's perfect. There's no decentralized exchange that's perfect. They have their pros and cons, and I'm going to dissect that for you. Second thing, I'm going to jump into the differences between margin, futures, and spot trading. They all have their pros and they have their cons depending on what you're trying to do. And I'm going to give you just a verbal explanation of some strategies for all three. And then towards the end, like I said before, I'm going to give you a trading strategy I use to make millions of dollars. It's called trend hacking. I'm going to show you trend hacking towards the end of this video, so stick along and definitely share this with a friend. And then the third thing, I'm going to give you a desktop tutorial breaking down KuCoin from, again, an expert trader. I've been trading cryptocurrencies for 7 years, guys. I made millions of dollars before the age of 25, created businesses in this market, and I'm going to be showing you guys a complete detailed tutorial. I'm going to break it down like a baby. You'll understand it, but it's also going to get as complex as an expert, so I can show you all of the little hurdles I had to jump over. You don't have to make the same mistakes I do. And mistakes in a financial market can cost you time and money. You could lose a lot of money. I've lost hundreds of thousands of dollars in one trade. Number 4, I'm also going to break it down with a mobile tutorial. So I'm literally going to do it on my phone too, because while I'm on vacation, because I'm an internet entrepreneur, while I'm on vacation, I like to drop a trade. I like to make a trade so that I can pay for the hotel stay. Or I like to make a quick trade so I can pay for my meal, because sometimes I splurge on expensive meals. You know, there's nothing wrong with being mobile and being able to make money wherever you go. That's actually what I advocate for, which, by the way, if you want to understand all of my trading strategies, everything I do to build cash flow, plus investing, plus short-term trading strategy, a 360 perspective in online entrepreneurship, we are actually doing a discount right now with Fundamental Secrets and Fundamental Secrets 2.0 as a package. It's a package, a 2-for-1, and you get a discount. Link will be in the description below. And then the last thing, I'm going to show you a simple explanation of a trading strategy Okay, it's hard to execute. I'm gonna be real. Nothing is a get rich quick scheme in life. Okay, it's gonna take practice, it's gonna take discipline, it's gonna take time, and of course, it's gonna take money so that you can actually trade. But I'm gonna show it to you, and maybe you can refer to this tutorial in the future. But this is one of the biggest questions I always get.
What exchange do you use in cryptocurrency, Alex? What is an exchange that you use?
I use all of them. I have accounts, institutional accounts because I run a hedge fund. I have personal accounts on all the exchanges, every single exchange. I use them all. I don't have loyalty to one. They all have their pros and cons, and I move my money from point A to B to C to Z. I move it back and forth. And if you want a list of all of the exchanges, use my website, my data and analytics company called coinpix.io. We are the greatest data and analytics aggregators on planet Earth. We give you the real price of Bitcoin and these cryptocurrencies, not a fake inflated price. There's a lot of websites that use aggregated data from somebody else. We get it directly from the source. We literally have to go into the trades. We go into the trades with a bot. We take the trades and we aggregate a real price so that you can get the exact price of Cardano. You get the exact price of Ethereum, you get the exact price of Bitcoin. Not only that, but we have fundamental analysis, we have technical analysis, price predictions on this website. Head on over to coinpix.io and I'll show you exactly right now how to find a centralized exchange on CoinPix. You can literally pick through the list. I'm gonna show you the list right now. Hi guys, this is coinpix.io. I wanna show you how you can get access to every single centralized exchange. So if you click Bitcoin, for example, all you have to do is come over here, click view full coin page. And then when you go to this part of the website, you're gonna log in or create an account. And when you create your account, you're gonna come back, okay? You're gonna go to Bitcoin, all right here. You're gonna click view full coin page. And this is actually giving you fundamental analysis and technical analysis. But if you click markets right here, it gives you a full list of exchanges that you can use. All you have to do is click it, and then you can make your accounts, as you can see here. And as you can see, we give you a percentage off the fees. Go ahead and use coinpix.io to get access to these exchanges and to trade cryptocurrency. All right, let's jump into the next part of discussion here. Let's talk about centralized exchanges and their pros and cons. Okay, the first thing, let's go over the cons. Okay, they always go offline. I can't tell you how many times I've seen Coinbase go offline. What happens usually is there's a big event, right? There's usually a big event where there's a lot of trading volume. There's a lot of people jumping in and out of trades for whatever reason, and the website goes down. This happens a lot, and it's been super annoying because sometimes I'm trying to make a trade, I'm trying to get out, or I'm trying to get in, and I can't trade, and my money's basically, halted. I can't use my money. This is why I'm going to show you guys a diversified risk strategy with centralized and decentralized exchanges. I'm literally going to show you what I do, okay? What I do to make sure that I could trade at all times. Let me say it again. I'm going to show you what I do to make sure I could trade at all times and my money's not isolated in one location. There's hacks that happen on decentralized exchanges as well, but there are hacks. You could lose your money. It's statistically unlikely, okay? It's probably not going to happen, but you could lose your money. There is people that's had that issue before, and the centralized exchange can go under and get liquidated. They can go bankrupt, and that has happened recently with a lot of exchanges. So you want to diversify your assets on different exchanges. So if one gets hit for whatever reason, you're not losing all of your money in one shot, okay? Also, you don't own your crypto on any centralized exchange. So if you understand the proposition of cryptocurrency, essentially you own the private key. The private key gives you ownership over the coin. So again, please hear me out. Have a diversified strategy. Don't put all of your money on one centralized exchange because you don't even own it. You don't even own the money. Number 3, some don't work in your jurisdiction. That's simple. You might be in a country where they block a certain centralized exchange. Again, refer to coinpix.io for the list of centralized exchanges. Limits, some will hold you back. They don't let you trade more than like 20K until you update your KYC or know your customer, your identification. Some will have you put in your whole entire history of everything. They'll ask you for your home address. They'll ask you for your identity. Sometimes they'll ask you for your passport and driver's license. So there's limits. That's the way it goes. On decentralized exchanges, which is for another video, we're not talking about that today, but on decentralized exchanges, you don't need any of that actually. And there is no limits. That's the pro to that. Now, let's look at the pros because all we did is look at the cons. They're way cheaper than everything else. I'm going to be real. Spot buying is way cheaper. way cheaper than anything else on a centralized exchange by far, by far, by far, by far. Ethereum is expensive. Now, it depends on which layer one you're using. It depends on which blockchain you're using. Again, it depends on what smart contract platform you're using. This is for the beginners that don't understand crypto to a high level. But for the simple person, for most people, for like 90% of anyone that's been in this market, trading fees on centralized exchanges are cheaper, okay? It's in a convenient interface. So it's something that you're used to seeing, like Robinhood. It's how Web 2.0 looks, right? You use an email to log in. Now, there is another concept called Web 3.0. That's the topic for another video. I talk about that on my YouTube channel, so make sure to subscribe. It's the future of finance. It's the future of pretty much the infrastructure of the internet. That's a whole nother topic of discussion. My goal is not to go into that today, all right? Well, we'll be talking about that in the future, so make sure you subscribe. And then the last one, I put it with a question mark. Although they have customer service, the customer service is really annoying. Sometimes you got to text somebody, but they do have that, and that is a pro. Because if you're using a decentralized exchange or a decentralized liquidity platform, or you're jumping out there into Web 3.0, there is no customer service. I mean, I'm basically the customer service with Fundamental Secrets. There's a lot of people that come into Fundamental Secrets just to get answers from decentralized exchanges and decentralized finance, DeFi, things like that. But there's nothing like a dedicated customer service to DeFi. So that's that. Let's jump into the next slide here. Let's talk about the exchange distribution strategy. This is super important. I do not keep all of my money, how to allocate your capital in different ways. Now, this could be with different exchanges. I don't want to isolate it to just KuCoin or just MetaMask or just Coinbase or just FTX, but they're kind of different categories of exchanges. So usually when I on-ramp my crypto, I usually will go through two, Coinbase or FTX, okay? So what do I mean by that? When I turn my dollars from my bank account into crypto, I usually go through Coinbase or FTX. And the reason for that is because their jurisdiction and their trading fees. So they are, obviously in the United States, you can use it in the United States. They're not going to be, hit with like a lawsuit anytime soon, in my personal opinion. They might, it could happen, but they seem like the safest. They're the biggest exchange. The bigger the exchange is, the safer it is, in my personal opinion. So I usually on-ramp my money. So usually, like if I'll buy like $50,000 worth of ETH or something, I'll start off with Coinbase or FTX. And then eventually, if I want smaller market cap coins, if I want riskier coins or coins that are not found on Coinbase or FTX, I usually send it over to KuCoin or MetaMask. MetaMask is a decentralized Web 3.0 way. It just has more options of coins and less jurisdiction. And it is a smaller exchange, but they have more options of coins. They have futures, they have margin, they have a lot more options in general. And, usually I'll send my money over to KuCoin. But if I were to rate it by safety, Coinbase and FTX would probably be way safer than KuCoin, in my personal opinion. That's just my personal opinion. You don't have to follow it. Also, usually I'll send some money over to these types of places like MetaMask and KuCoin. They're considered a little bit riskier, but the safest of all would be like a hardware wallet or a cold storage wallet. That's the safest by far, no ifs, ands, or buts. Now, personally, right now, being that I don't have a lot of crypto and I've just been leveraged trading, I don't have anything in my hardware cold storage wallet. But in the bull run, I usually have the vast majority of my crypto in one of these methods because it's the safest by far on anything on planet Earth. It's the safest by far. So that's the gist there. I usually onboard my fiat into crypto through Coinbase FTX. Then I send some Ethereum here. I send some Ethereum there. It's not just KuCoin. There's a lot of other exchanges. Again, if you want to get access to all of the exchanges, coinpix.io, head on over to that website and it'll show you everything. And then if I want to save it like a savings account, I put it in my hardware and cold storage wallet. Here's an exchange risk strategy to allocate your portfolio. You never want to have all of your money on one place. Please do not do this. Do not do this. Do not do this. Don't even have all of your money in a bank account. Bank accounts don't give you any yield. They offer you like 0.00001%. And they're actually not the safest. There could be a run on banks. There could be a massive problem that happens in the banking system. So I don't even keep all of my money in a traditional bank account like Wells Fargo or whatever traditional bank account you guys use. I don't keep all of my money on there. That's wrong. But what I'm talking about here specifically is crypto specific. So again, I usually keep the majority of my money on a hardware wallet. This changes because right now I'm not holding too much cryptocurrency. So a lot of it is in physical cash and in my bank account. So my bank account to me is kind of like the safety of a hardware wallet. It's not perfect. There is risk to it, but it's insured by the government. And there's obviously a lot of assurances when it comes to that. But the medium risk is like a hot wallet, like a MetaMask or something like that. That's when I'm doing decentralized trading, or I consider it kind of like medium risk would be like a smaller exchange like KuCoin. And you'll know this as you go through. There's no way to like rate them. But you'll know which ones are sketchier than others, which one have more credibility. The gist is the biggest exchanges typically have the most safety. And then the last one here is I'll allocate the minority of my crypto to a centralized exchange. So a hot wallet is technically, in my personal opinion, safer than a centralized exchange because you have access to your crypto. As long as you know how to navigate the internet. These are a lot of things. Leave a comment below if you have a question and I'll do my best to answer it. But this can get very, very crazy. Now, let's jump into the part that's probably, in my opinion, more valuable than anything else. Understanding the difference between margin, futures, and spot trading. Okay, so these are different types of trading methods. I'm going to dive into it right now. First things first, spot trading are basically financial instruments that are traded immediately and deliver it on the spot. So when you want to buy Ethereum, for example, you buy it immediately. They give you ETH. They give you ETH on the spot. Now, there's different types of orders that you can place, a market order, a limit order, and a stop limit order, and we'll talk about that later. But spot trading is essentially you're trading your money for the asset on the spot, okay? Spot market transactions can take place on an exchange or over the counter or OTC. That's a different type of exchange. We'll talk about that later. All right, if we jump into futures, this is where leverage comes into play. Futures typically has way higher leverage. A futures contract is an agreement to buy or sell the underlying asset at a predetermined price in the future. So essentially, you're saying, hey, I'm going to, short the market. You ever heard of long and shorts? I'm going to short the markets. I'm going to bet that the price is going down. And you basically buy a contract to say that, okay? Traders can participate in market movements and profit by going long or short on a futures contract. So if you think the market's going up, you go long. If you think the market's going down, you go short. And I know you guys heard that before, and that's where it comes from. Now, if we talk about margin trading, it's very similar, except for the fact that they actually use the spot market. The only difference here is that it's not a contract. So margin trading is essentially the same thing as a spot buy, but they allow you to borrow money. Margin trading is a method of trading crypto assets via borrowing funds, and it allows traders to access greater sums of capital to leverage their positions. So they let you borrow capital, okay? And there's obviously a fee involved with that. Technically, you're buying spot with borrowed funds, okay? So the difference here is that you typically get lower leverage with margin trading, but you get easier fills. The orders are easier to fill. The orders are easier to execute. And in futures, you get high leverage, up to 100x leverage, but it can get very risky and there's more fees involved. That's the gist. I don't want to dive too deep because it's going to confuse people. Now, if we come over here to leverage, there's a couple things you have to know, okay? Leverage, this is the details worth noting. I kind of explained it. Margin traders usually have access to 3 to 10x, okay? And it's with assets provided on the platform. And then in futures contract, you have a higher leverage, okay? So those are some details you need to know. All right, let's jump into the fun part. Let's jump into KuCoin specifically so I can give you guys a tutorial breakdown of everything. Pay attention. So if we come over here, all you have to do is just create an account, go to KuCoin, use the affiliate link below. Of course, use that affiliate link, click it, open it up, and create your account just like anything else. Now, I'm going to try to go through this in a simple way. There's no organized way to go through it. I've used so many centralized and decentralized exchanges that I'm simply just going to break it down for you the best I can and different ways. So we have the user profile. Obviously, you get some, different pieces of information in there. You should definitely turn on Google verification. I'm not going to do that, but it's basically two-form authentication. Highly recommend you do that. Click it, walk through the tutorial. As you can see, we have withdrawal limits. There's a 24-hour max. I can only withdraw 1 BTC every 24 hours, which is super annoying, but it's the way it is. If you go to security settings, you can see that there's all different types of things. Again, Google verification. This is the one thing I highly suggest you do. Also, set up your trading password because you're going to use that to actually trade, okay? And we don't have to do any of these other things if you don't want to, but you could configure it for better security. I suggest you do it if you want to. But again, the reason why I'm not really scared about getting phished or centralized exchange issues is because I diversify my assets, and it's just so unlikely that you'll get hacked in the first place. And if you do, I'll lose a small amount of money compared to, the overall portfolio that I have. Now, if we use KYC verification, again, same thing. I didn't actually verify because I didn't need to. I use my assets in different ways, but you just start verification, you upload your identity, and you go through that process. Is super easy. API management is basically, we actually use this to pull data, but you don't need this. You don't have to worry about that. Downloading your CSV could be a situation if you want to download all of your trades for taxes or whatever the case is. And a sub account is if you have a secondary account that you want to connect. It's that simple. I'm not going to go through that too much because it's pretty much irrelevant. If you come over here to wallet, this gives you an overview of all of your funds. So as you can see, I have $17,498. I have some on the futures account. But remember, I told you there's a difference between margin and futures. The trading account is essentially spot. That's spot buy and sell. That's like directly trading the assets. This is spot buy, margin account, futures account. And then the main account is where you deposit or withdraw funds. So if you want to deposit funds from Coinbase, that's where you go. You deposit funds from there. All right, I'm going to do a quick tutorial on how to send money from point A to B. So the reason why I'm showing you guys this, because you will have this problem in the future on how to send your money from exchange to exchange. Just like in this video, I told you I was going to give you every detail. I want to show you how to send your money from Coinbase to KuCoin. Why? Because typically I don't start off with my assets on KuCoin. I usually start by connecting my bank account to Coinbase. So I connect my bank account to Coinbase, then I send the money from my bank account into Coinbase, and then typically I'll buy Ethereum or Bitcoin or USDC, any of the assets, they all work, and then I'll send it over to KuCoin, all right? And this is where I actually place the short leverage trade, which of course, towards the end of the video, Nick's gonna show you exactly where to place them. But I start off with Coinbase always. And there's a lot of reasons for it. I'm not gonna go over too much today, but this is the most efficient way to do it. So I have to show you how I do it. Now, as you can see here, I have $41,000 worth of assets. I'm gonna send and receive. So I click send, okay? It's gonna ask me for a public address. It's loading right now. Okay, it says temporarily disabled for different blockchains. This does not pertain to us. ETH will work, okay? So Ethereum blockchains will work, and I'm gonna use USD coin. But first, let's see where my assets are. So you can see I have $41,000, I believe it's in USDC. So if I exit here, you can see I have most of it in USDC and then some of it in Tether, okay? So both of them will work. I'm gonna start off with sending my USDC coin, okay? So I click it, all right? Actually, you don't have to click it. Let's go over to KuCoin. So first things first, on KuCoin, you're gonna see a little button here that says wallet. If you don't see that, it's because you're probably on KuCoin Futures or some other website. There's different websites. If you click KuCoin Futures, it takes you technically to a different KuCoin website. But if you click wallet here, you're gonna have different trading accounts, okay? So what we wanna do is deposit money in our main account. So in our main account here, I'm gonna click that, okay? And we're gonna look for is the coin that we wanna send. So USDC, right? That's what we talked about, USDC. So what we're doing here is we're depositing, right? We're depositing the money on KuCoin. So I'm gonna click deposit. All right, it says select network. Make sure you always use, not always, sometimes it'll change. This is advanced though. These are all advanced. I would ignore them, please, for now. But right now, what we're gonna do is ERC20 or Ethereum, okay? And then it's gonna give you this address. So you're gonna click copy on that address. You're gonna go back to Coinbase, and you are going to click send, right? So we're on USD, right? Send, all right? You see pay with, okay? We're gonna send, you see right here, ignore this for now. It says send USD coin or USDC, okay, to this address. So again, that address came from right here. I just press copy, all right? Come back to Coinbase, all right? I'm gonna Control Alt, V. Now it's asking for the amount. I'm gonna send all. I have 25,000. I'm gonna press continue. And then I'm gonna send it. All right, now it's asking for my authenticator. On Coinbase, when you set up your account, there's gonna ask for security verifications. I highly recommend you send them up and connect your account and all those things. There's gonna be a couple steps you have to walk through in Coinbase, set up your account, verify your identity, et cetera, et cetera. All right, so I confirm my send. And it should go over to the account. Just let it verify a little bit. While that happens, there you go. It's going through. It usually takes like 5 to 10 minutes. Don't be alarmed if it doesn't go automatically. It will go over eventually. All right, so let me really quickly do it again, but this time I'm gonna do it with USDT because we saw, right? We saw that I had some more money in USDT. I wanna send it all. So USDT right here. All right, you see network, I'm going to do ERC20, right? USDT. I'm going to copy that. Again, same thing, right? Tether. Come over here. I'm going to press done. I'm going to send. But this time we're sending USDT. Tether, boom. Send. I'm going to put the address in. And then I'm going to put send all. And for some reason, it's not saying I have any balance. Usually, I don't know why that happens sometimes. Sometimes they put their money on hold. Let's click it real quickly. See what's happening here. It's not really telling me. Let's go to wallet. Yeah, it says completed on the 26th. Today's the 31st. So it should go through. Let's try it again. Sometimes you have to diagnose these things. And I'm glad I'm going through it right here so you guys can see that it's real. All right, it says USDC balance. Send all. Now, I believe the reason why they're not letting me send it is because of account limits. So if you have account limits, all you have to do is apply to increase limits. They're asking for more verifications or whatever the case is. But it's okay. I could just wait for tomorrow and I'll send the rest of the money over. There's no need to rush. All right, now that we have the USDC here, you can see the 25K. It's not going to let you transfer USDC over to the futures account, this is where we want to get the money, to the futures account. The reason why is because they only accept a couple assets, but just long story short, they accept USDT. So what we want to do is we want to transfer, okay, this over to the trading account so we can trade USDC for USDT. So if we transfer that, okay, I'm going to go over here. I'm going to transfer the main account, right, because this is where it starts. It's in the main account over to the trading account. And I'm doing what? USDC, right? Go back to available, boom, click it, confirm. It's going to transfer it over. Then I'm going to click trade. It's going to take me to the trading account. Okay. Press allow, who cares? And then it's going to ask you for your password. Put that in real quick. All right. So what I'm doing is I'm basically trading one stable coin for another stable coin. So all I have to do now is come over here and type in USDC. All right. So it's USDC to USDT right here. So all we're going to do is 100%. And we're selling it, right? So we're selling the USDC for USDT. And you can see I got right here 25,906. Sell it. Boom. We're doing market. Sorry, let me just exit that off. So we're going to do market price, 100%. Again, sell. And it goes through. There you go. You have successfully placed the order. Now we can transfer from the trading account. And if I click trading account, you can see it's in Tether. So it's in USDT now. Now I could transfer this to the actual futures account. So I go to futures right here. Boom. Confirm. There you go. We transferred the assets over to the futures account. And then towards the end of the video, we're going to show you, and I just want to verify that we did that. So if we go back to overview, you can see it's in the futures account. Now, towards the end of the video, Nick's going to show you how to short the market or put in a trade to bet on the downside. But I wanted to show you this quick tutorial. Now, one thing you could do to bypass what I just went through is when you set up Coinbase, if it's the first time you've ever set up Coinbase, instead of buying USDC, you could have off the bat bought USDT. So when you click buy and sell, you connect your bank account. When you set, you verify your identity, you set up your KYC, all your security settings. Instead of buying USDC, you could just buy Tether. If you would have just bought Tether, you could have sent the Tether over to KuCoin and then bypass that trade that I just put in and just simply set the Tether to your futures account. So once you have the money in the futures account, you're ready to trade and you're ready for the rest of the video. Now that you understand how to get your money onto KuCoin, I think it's smarter if I hand it over to Nick, our head coach at Fundamental Secrets, to show you the exact entries that you should be putting in, not financial advice, but the exact entries he is putting in, as well as telling the people in Fundamental Secrets so that they could profit on this trade. He is an expert in short-term technical analysis. I laid out the long-term potential. Now he's going to show you on a short-term time horizon where the exact entries should be from his perspective.
What's up, guys? My name is Nick Choi. I'm the head technical analysis coach for Fundamental Secrets, and I'm going to be walking through some things with you to get ready for this big short that's coming. So first things first, you want to be and set up with your KuCoin. And what you're going to do is once you deposit on KuCoin, you're going to click this wallet button and your KuCoin account is going to have money in your main account. What you'll do is you'll trade your USDT by hitting transfer on whatever asset you have and transfer it from your main account to your futures account. And once you do that, you'll have money in your futures account. I already have some trades active here. So all you're going to do is click trade. and it'll take you to KuCoin futures. And I'm going to show you guys some of the entries that I took in here. So I've shorted Bitcoin, Ethereum. I have a pretty big stop loss, and I'm going to be scaling more as time goes. But all you're going to do is hit market, choose the amount of whatever you have deposited, whether it be 50%, and then you can choose your leverage, and you're just going to hit sell or buy. That's all it's going to be. Very, very simply, you're going to just hit sell. It'll tell you your liquidation price. You'll type in your trading password. And boom, you're in the market again. So very, very simple. That's all you got to do. If you want to change to another currency, you just choose Bitcoin, BCH, all the different things they offer here. So let's go into what we're looking at. We'll give you a brief rundown of my TA strategy. All I'm really doing is using fair value gaps, liquidity, and trend lines. Very, very simple stuff. That's all it's really going to take here. A fair value gap, all that is that when it's places in price where it moves too fast or too quickly in one direction and leaves a gap in the candlesticks, and price likes to come back to those areas and give us an opportunity to enter either long or short. I'll show you an example of one that we took back in September, and everybody in Fundamental Secrets was able to catch it as well. Was this fair value gap right here? Price broke a low, and all we simply did was short at the entrance of the fair value gap, stop loss above, and target the most relative low. Obviously, price got mint, and now we're coming to play. So let's show another example here on Ethereum, where we took this short here. Price came into our fair value gap, broke out of this trend line. We put our stop loss above the fair value gap, targeted the lows. Very simple. Liquidity is very simply going to be at old highs or old lows, meaning like this June low here that we're targeting currently, or this high over here that we were just targeting on any potential longs, or double tops and double bottoms. So we had these double bottoms here. This is what we targeted on our short. As we're getting into our short position here, we're targeting these double bottoms here, as well as this old low here. So very simply, just looking at that as liquidity, looking at imbalances for entries, and using trend lines to get our overall direction here. So we're going to go into it and take a look at what we're looking out for on Bitcoin. And I'm going to start here on the total market cap. Now, the total market cap, as you see here, is coming into a fair value gap. And I'm looking for a price to reverse from here and continue to take these double bottom liquidity here and eventually come for this old low here. What this translates to on Bitcoin is this low on this consolidation range and the June low, old low that's here at 17,000. So one thing that I notice here is basically what we do is we kind of identify on the chart what the sheep or the majority of people are doing, and then we do the opposite, because trading is a zero-sum game. So all that means is that for every buy, there's a sell on the other end, and for every sell, there's a buy on the other end. So there's never just buying and selling randomly. So when the majority of people are buying, then we know that there has to be some type of institutional level or smart money, market maker level selling going on when everybody's buying, and vice versa. Because majority of people lose, we know that if majority of people are doing one thing, we want to do the other. So right now, we know that majority of people are buying. So I'll give you a brief rundown on what we're looking at here. We have 1, 2, 3 touches on the trend line, on this big weekly trend line. And when we drop down here, we've now broken out of that trend line. Now we know that seeing a break of this weekly trend line is going to cause an influx of buyers on the retail side. And people are ignoring the fact that we have an old low here with a double bottom and a big imbalance below to fill. And so I do believe that we're actually in for a really big shorting opportunity. Just technically speaking, not even just factoring in everything else that's going on in the world. And all we're simply doing is taking a short from this imbalance here. So I'm going with a pretty wide stop loss above this old high here. So it's going to be around 22.6 is what I got it. And I'm going to be taking a short at current price, and then I'm going to take another short at 21K. That's been our target price. It's just half of the fair value gap. That's another little tip that we use and I teach, is just trading half of a fair value gap allows you to have a better risk to reward ratio. So that combined with our Fibonacci of our 61.8 is just a very simple short that we're going over in the market. And I am anticipating this trend line to get retested below 17,000 and break this June low. If we're taking a look at Ethereum here, everything is moving very simple and very in sync. It's going to look just like the total market cap, as you can see here, as well as Bitcoin. Just a general rule of thumb, when you're doing TA on crypto, all you need to do is look at Bitcoin, total market cap, and Ethereum. So simply put, we're just looking at this fair value gap. We have made a quick little short here and got out because the market had moved up before Bitcoin and total market cap had got into our key areas. So we wanted to, I wanted to take a very careful look here. So I got out because it was planned that they would get there on the same time. And because they're not, and we know they're moving very correlated, I'm waiting for and expecting Ethereum to have some manipulation up into the 1680 price range, even up to 1700. So I'm having a pretty big stop loss, and I'll be scaling in as we go by. So I got a couple entries here on 1580, and I'm also shorting on Osprey, which is the ECN Forex broker. And then I'm going to be shorting up here as well if we actually end up making it there. So I've taken a pretty generous stop loss because I really want to be in this move, and I want to give it some room to breathe for any room of manipulation. And all eyes are going to be on this week and next week's weekly candle. So now that we're here, I want to see how things go with FOMC next week. The fact that we got here early, I would hope to see price start to reject now, but we may just stall for the rest of the week. It'll be interesting to see how these next 2 days go in the market. And so what I'm anticipating is that we get a reversal from either this order block or this fair value gap here, and we come to retest this trend line and take out these lows. But ultimately, I am targeting the June low, just like I am for Bitcoin and the total market cap. So very, very simple things that we're looking at here. Not too much complications, just very simple price action, very simple technical analysis. I pray you don't get lost in the sauce here with trying to catch these breakouts. Don't believe the hype. They're just gathering liquidity to go lower, and then we'll be seeing a longer term move higher once we get below this 890 price. So really below 900, when we come fill this fair value gap, take out these double bottoms, we'll actually be making a bigger run there. So another pair we'll go over quickly is ADA. Cardano does not have much upside potential. We're seeing this long trend line getting retested here. Now, when we drop down to the daily time frame, we've broken out of this trend line and have not retested yet. So at the minimum, we'll get a retest of this trend line. However, I do believe we're going to come take out these double bottoms at 32 cents here. So we'll see a short move here. I simply entered on the daily fair value gap entry at the start, stop loss above. You can see it nice and clean on the daily, and that 70% of our Fibonacci retracement is a key area for us at Fundamental Secrets. So very, very simple execution. I'll show you here on my KuCoin, my active positions here. I got my BTC short at 20,800, Ethereum at 1549, ADA at 39 cents, and I'll be adding in as time goes. Just getting ready to really load up a sizable short here. All of these about 10, 11x. So we've got a lot of opportunities coming into this market. Hopefully we can all take advantage of it. And if you like this content, just go ahead and check us out at Fundamental Secrets. I update the group every single day.